It's already a very strong product, but now we added something which makes it even better and perhaps unique, but this is certainly a very advanced technology. It's also a so-called direct deployed software on NinjaTrader 8, so there is no middleware, which makes it very fast. It's like lightning fast, and that has not changed. If you're new to our work, just a few words about me. I'm in Toronto, Canada. I founded Remek about 12, 13 years ago now, and we've been around on the NinjaTrader platform for many years, and we will be here as long as we can. I also teach trading strategy design at the graduate level at a university in Hungary. So I've been doing that for 6 years. We also have a market analysis service that runs every night. It's been running for 4 years. Before I started trading, I worked for 10 years at a large bank in Europe on the software side. So that's where my whatever expertise I might have in software and software design and architecture, it comes from those years. This is the version tracking page. This is one page I want to ask you to bookmark. A little bit technical, but not too geeky. Still an accurate description of each step of the development of this product. And also on this page, there's a little table here, which I hope makes it a bit easier to understand what's the difference between the three products. The standalones are a product suite consisting of 3 software. They are very similar, but because of the way NinjaTrader is built, we had to, in order to do everything we ever wanted to do, we had to put it into 3 different products because, as you can see from this table too, if we do one thing, we cannot do something else. So we couldn't squeeze everything into the same product. There are video tutorials if you prefer video as opposed to text. We have lots of videos about past webinars, first of all, and workshops. Feel free to explore those. And many of these workshops at the time were about the standalones. So back to today. What's new in 3.60 and why you should have it? First of all, in this last video, I'm showing you the ocean. And on the ocean on the left is navigable for a certain account size, and we would trade it in a safe way with a certain account size. If we put the same account size onto a different environment, perhaps the same instrument, but a different environment, then, as you can see, because the weather changed, the volatility changed, our account would be destroyed. Now, unfortunately, still many traders think of risk in dollar terms. And this is what we want to change a little bit with this software and draw the attention to the fact that risk management should be based on volatility, not on the tick size, whether it's $5 a tick or $12.50 a tick, not on the minimum broker requirement. None of those numbers are relevant, actually. The only thing that matters in order for us never to blow an account is an accurate, objective measurement of volatility. And that's what we are doing. That's what this software does. And that's what this software will do in real time, automatically, run the math so you don't have to, so you can focus on other things. I'm not going to spend too much time on this JPEG here. Many of you have seen this before. It's a trade we did recently on the Japanese yen. But this JPEG is a good summary, a quick summary of everything we do. What are we looking for in the market? Where do we want to enter a trade? Where do we want to, how we want to manage the risk? And these lines, the target areas, the 1R concept where our risk equals our reward. This is what is embedded. Much of the steps and the execution of trade ideas is automated with our software. What is the idea? We trade the reemergence of momentum out of consolidation areas. That's just a very fancy technical term. bear flags, bull flags. But of course, everybody trades bull flags. Everybody can trade flags, but not everybody's profitable. So the trick is always in the details. Our software helps us to identify good consolidation areas, which have a good chance of success. And we avoid one trap that many traders fall into, the endless search for some kind of secret, some kind of combination of the many hundreds of indicators, which probably you will find what we have found, that leads nowhere. That's a dead-end street. That's not where it's at. Where it's at is a careful study of crowd behavior, uncover repeating patterns in crowd behavior, and to build a strategy, a trading strategy, basically a set of rules to capitalize on our observations. And we have the software to do it consistently and to do it fast. You can still today trade manually, but probably not on very small time frames. On weekly charts, yes, you can do it manually, but on the time frames that we trade, couple of minutes, couple of hours, maybe a day or two, is just too fast not to automate it because our competitors automate everything. This is one software architecture challenge. While doing all these things, still always keep the control with the trader, not to take away control from the user. What's new in 360? Automatic trade management, which is based on volatility. You will see that what we had before in the previous version was not taken out, was not taken away. Nothing was taken out, which was in there already. Two options were included in the form of a drop-down list. There's very sophisticated architecture behind it, but what the user sees, what you will see, is just a simple drop-down list. Also, we added convenience and functionality for traders who may not be trading the US market. We have now customers in 50 countries on 10 different stock exchanges, from Japan to Hong Kong, everywhere. So it was important for us to cater for those users whose brokerage account may not be in US dollars, or the instrument that they trade may not be US dollars. Now that's all been taken care of, and we have a conversion system. So which means that the risk management algorithm and calculations work also if the account and the instrument in USD, and also if the account and the instrument is not in the same currency. So that's basically what's new. We ironed out a little bit of inconsistency in the HTF filter, the higher time frame filter, and now the program is completely consistent and provides a perfect multidimensional view if you choose to use the HTF filter. I'm going to show you that too as we go along. One more important thing, of course, the performance of the system. So three things, we discussed this many times before too, three things at least, but in my view, are needed for success on the financial markets. One is an edge, which is a statistical advantage. What we do, our set of rules of engagement, must be profitable over a large number of trades. Otherwise, the adventure makes no sense. That's one thing, the edge. I think we can show you, and we have shown you over 4 years now, over like 5,000 trades, that we do have an edge. Second is capital, because if I want to take the plane to Paris, well, I need enough gas to get there. No matter how good the pilot is, no matter how good the plane is, we need fuel. That's capital for us. And we need the right amount of capital. And we have our risk management rules actually make sure that those right amount of capital calculations are not violated as you trade. And the third one is skills, because we are a software company. Think of it like, I always use this analogy for a piano, but let's suppose we build the best piano in the world. The software architect is the person or the company who built the piano. But it's not the Steinway company that's going to play at the concert. So it will be you will be the pianist here. We give you a tool, we give you the piano, the best we can, but you need to develop some skills, and you definitely need to know the instrument, in this case, the software, to use it to your advantage. So the three ingredients, again, an edge, that's what we can most help you with in the form of this software. And then capital, that must be bring your own, and skills, which we do our best to help you with in the form of our services and resources on our website. Okay, so let's imagine I created a SIM account with $10,000 on it. So we are in BT, and we are on a SIM account which has exactly $10,000 on it. I chose this, of course, because we can easily count if we want to in our heads. Now, remember, in real life, the account will not always be 10,000. It's going to be something, and it would be a bit more cumbersome to do the math. But whatever the account size is at the moment of the trade, the computer will always run the mathematics with lightning speed. Manual means that and I'll show you now, manual means that you have to manually enter the size of your account. Well, you may want to use this method. There's nothing wrong with this, but just note that, let's say it's 9 o'clock in the morning, you put the strategy on the chart in NinjaTrader, and you enter your account size. Let's say it's exactly $10,000. Well, an hour later, your account size might be 9,000 or might be 11,000. But unless you remove the strategy from the chart, the strategy will still be calculating with a $10,000 account that you entered at 9 a.m. But after a couple of trades, your account size is most likely not $10,000 exactly. So if it's not $10,000, then the 2% would be different too, and any other percent that you entered here would be, of course, different. So that's why we introduced automated risk management. You don't have to enter manually the account size. You only have to specify which account up here, whichever you're trading on, and this program will go to that account and check the account size. And that will be used as the basis of all the calculations. All right, so that's automatic risk management. And the cool thing about it is, let's say you start with 10,000. Let's say, by 10 p.m. or 10 a.m., an hour later, you have 11,000 on the account. Well, now the 2% of the 11,000 is different from the 2% of the 10,000, vice versa for losses. So imagine you're down 9,500. The 2% is modified too. You will not be allowed the same kind of trades that you were allowed on a larger account. So it protects you. This is dynamic real-time capital protection feature of this algorithm. Okay? At the same time, the account grows, then of course the 2% and all the other factors would be calculated before each trade. And that's important. When the trigger comes, this is run in a millisecond before the decision is made by the software whether you're allowed to enter the trade or not. Now, the software will always tell you what is happening. So as you will see, I'm going to show you in a second, there will be messages on the chart. So the software always tells you what happened, what is happening, and why it happened. Also, there's no obligation to use it. If you want to trade without it, we're not stopping you. So this software is not forcing you to use any functionality if you don't want to. And if you just want to use the account size calculation feature, but you don't want to use the daily loss, just switch it off. And that's all. Okay, and now finally, let me show you the third one, account conversion. That is for situations, it's not for everybody, but for our international audience outside of North America, let's say, or if you choose to trade other markets from North America, your account may be in US dollars, but your account will also maybe in euro, for example, but maybe you are trading the ES, which is denominated in USD, from a euro account. In that case, we enter whatever the conversion rate is on that day, and everything else is done automatically. Most of us, I would say, would use the auto because our account and the traded instrument would be in the same currency. But again, we wanted to do the best we could while maintaining the speed for anybody, anywhere in the world, regardless of the market. So that's the story behind the auto conversion. And I'm going to enable the strategy. It's just going to take 1 millisecond to get loaded. So it is fast, you see. I'm not sure if you can see the questions, but Bill's question is if this applies to ProSTR as well. And the answer is that it doesn't. ProSTR, the twin product of BT within the standalones, ProSTR uses NinjaTrader's ATM strategy. NinjaTrader's ATM is advanced trade management. It is advanced, but it's not volatility based. So it's just simply not possible. NinjaTrader's ATM will never really know the difference between those two oceans in that video. Let me just hop back onto BT. We have the BT strategy on the chart. It's switched on. I'm waiting. I'm sitting here. I don't have to touch the mouse. We just had a trigger not too long ago, but at that time I was not trading. Now I am trading. What are we looking for? We are looking for the next bull flag, and if there is a potential opportunity which the algorithm will calculate for us in this area somewhere, potentially we might get another signal. Let's just imagine for 1 second that soon in the future, we're going to get another signal. And at that time, when all the conditions are met for the trade, there will be one more step. It happens so fast, of course, you can't see it. All you see is a message. And all you see is the results of the calculation. Am I in a trade or am I not in a trade? And that will depend on the mathematical calculation within the algorithm. The algorithm does the heavy lifting for you. You don't have to be bothered by these calculations. And the math, the algo will tell you if you are allowed to take this trade or if it exceeds your risk management rules. Now, who set the risk management rules? Of course, it was you, the researcher side of you, who ran the test, did the back testing, optimization, whatever else that we have all those videos about. Monday comes, you start trading. Monday to Friday, I don't mess with the settings. I can stop trading because Monday to Friday, I'm the trader. The trader doesn't mess with the settings. I'm under instructions to use these settings. Who told me? The researcher did. So don't get mixed up in the roles. And the point is that these are the settings that you set based on your research, based on your testing. You save the template. Monday comes, you start trading, and the algorithm will automatically do the calculations for you before each trigger. Red if the trade is not allowed, and it would be green if the trade were allowed. And the message, if you read it, it tells you everything which is being calculated in or has been calculated in the background. So you always know why you are not allowed to take this trade, for example. Now, let me show you something. Certain volatility conditions are present in this chart. Think of the ocean. Could be peaceful, could be stormy. The software knows. And it is displayed here that the 2% of the account based on these volatility conditions is $124, which is more than the 2%, so this trade is not allowed. So what can I do if I want to trade? Well, there are 2 or 3 inputs in the equation. I have to modify something. So let's say one thing, of course, I can modify. I can increase the account size. So let's do that. Here we go. I'm going to go into this SIM account, edit the account, and I'm going to increase it to, let's say, 20,000. So I have increased the account size. Now the 2% of the 20,000 will be, of course, a different number. And let's see what the algorithm will decide. There's no guarantee. I think it would go through, but we'll see what happens. Let's see. And remember, since I'm in auto mode, I don't have to enter the 20,000 manually because the software will know. I enable the strategy. You see, it's still not enough. It's still not enough because the 6 ATR is $320. It converts volatility into US dollars, and that is right now too much for our accounts. So what else can I do? Of course, I could increase it to 40,000 or 100,000. Probably it would come to a point where the trade would go through. The other thing I can do, decrease the number of contracts traded. Right now, I'm trading 2 contracts, one here and one here. If I enter 0 here, I'm just going to trade 1 contract. If I trade half the contract size, my risk would be half. Let's see what happens. Still not enough, but you see the 320 is now only $160. So my risk did decrease to half, but it's still too much. What else can I do? Well, so I have increased the account size 20,000. Okay, I don't want to fiddle with that anymore. I have decreased the number of contracts from 2 to 1, and it's still too much. What else can I do? Increase your risk. Exactly. Thank you. Yes, everybody got it. Or go to micros. Yes, of course. You can do all these things. Another great question. With BT, with these risk controls, would it be suitable for intraday trading? Well, yes, that's exactly what it was built for. Intraday traders, we have to be ready for the battle. And one thing is to remove our emotions from the trade, because what this does, this is objective. If and when every time I put BT on the chart, remember, what am I doing? I'm preventing myself from hurting myself. BT on purpose will not allow me to move the stop and the target. If you want to do it that way, we have something for that. It's called Pro STR. And believe me, one way or the other, our opponents on intraday timeframes are using similar tools. So we have to show up with the right tool for the battle. And automation and removing our fragile emotions from the trade is a plus as opposed to a minus in this battle, in my opinion. Let's just say 4%. I enable the strategy. That's it. We solve the problem. Of course, mathematically speaking, I'm not saying that it's a good idea to increase the risk without consideration. But here we go. Here's the math. Remember, we only trade 1 contract now. So that's one way we decreased our risk. So we are just trading 1 contract with free ATR stop. That's converted instantly into US dollars, 155. And that's within the 4% because the 4% would be 800. And instead of the 800, our risk is only 284. We can also just switch to the micro contract and decrease our risk 10 times instantly. Yes. One more thing, volatility changes. Volatility changes 2 ways, between instruments and within the same instrument. So if we're not careful and if we think it doesn't matter that the conditions have changed, and if we venture onto the new conditions with yesterday's account size, which was okay in a peaceful environment, we will just end up with losing trades, a couple in a row before we realize what is happening. We can halve our account if we're not careful. The software would prevent that right from the beginning. One more thing I just wanted to finish the thought, that volatility changes not just between instruments. Obviously, the ZB is not the same as the GC, for example, but volatility changes from time to time, from one moment to the other, within the same instrument. Never feel bad about a trade not allowed message, because that's your safety belt. And it's automatic, no emotions, no greed or fear or revenge feelings, anything. It's just the software. This is basically what I wanted to share with you. I hope that I was able to show you the cool features and the real-time automatic calculations to convert volatility into ATRs and ATRs into US dollars before each trigger. That's just not possible. So Bill, when you have BT on the chart, you have all the heavy lifting is taken off your shoulders. So you can focus on 2 buttons, the direction of your next trade, and the other button is the on-off button. Now, if you are in a trade, if you are already entered in a trade, then think about what happened. Then you were the one who switched this on. So this is switched off by default. You have your trader hat on, you're expecting a trigger, you want to trade, the trigger comes, you're on the market. And then that's when the trader starts to have all kinds of feelings and remorse and greed and everything else. There's 100 different chemicals start to go through our brain, which make us make bad decisions. So I would say in that situation, before the trigger came, I was still in my right mind. Once I'm in the trade, I'm not in my right mind anymore. I'm either greedy or I have fear or I wish I wasn't there or anything. We all know those feelings. The software has no feelings. So I would say, to answer your question, I would not touch the mouse. If it's a loser, it's a loser. I was the one who took the trade. If it's a winner, it's a winner. If I have a headache or if I want to modify my trading plan, then let's modify my trading plan, but not in the middle of a trade. Now, having said that, if something happens that you really must get out, you just have to get out, then you can do it here. You right-click and cancel, and you're done. I would say it would not happen too often because if I don't want to trade, I switch it off. If I took the signal, then I want to finish the trade. All right, so just one word about BTX. BTX is the research and bulk trading tool. Yes, there are people who trade large amounts algorithmically, and they may not want to look at 25 charts. BTX is the product which is able to run without a chart. You're in Control Center and New Strategy. You can put BTX strategies, any number of BTX strategies on this panel and run it on 100 different markets. That's obviously not for everybody, but it is here if you want to do it. The other use of BTX is somewhat a bit more sophisticated, but there's a very fine little trick here. There are certain situations where you do a back test and you want to filter trades, long and short trades, and you want to separate long and short trades. Maybe in the back test or in the optimization, you only want to consider short trades, or you would only consider long trades. If for any reason you want to separate long and short in the back test, if I can find the setting, you can do that with BTX. Long only, short only, and you can only backtest for long trades or for short trades. NT8 is good. I wouldn't do it on anything else at this point. But of course, like every software platform, it has a certain architecture. And what we had to do, we had to adapt to that. That's why we have 3 products. Thank you very much, and mindful trading.